Well, after Bitcoin held around 105K all weekend, we have opened this week with a drop in price down to around the 99K region. Now, if you know this channel, if you understand our trading strategies, you'll be aware of something that we always talk about at the beginning of the week called false week move beginning. That is what we're in right now, and that means that we need to start looking for potential setups in the following sessions. So I'm going to get straight into TA in this video. I'm not going to worry about the news. It doesn't matter why this is happening. What matters as a day trader is where we can make the best use of the current price action and what our expectations are for further downside or upside, just so that we can simply take trades. If you're new here, welcome. If you're returning, welcome back. I'm Annie and this is Trade Travel Chill. Be sure to hit that subscribe button if you're not already subscribed, and hit the like button whilst you're down there as well. Now, before I get into the TA, I do want to just say one thing. I am noticing on Twitter a lot the despair in the market, and a lot of people aren't able to cope when the Bitcoin price drops because it has a very large effect on their altcoins. You got to understand, if you're in this market, there are two ways to be in, or two main ways to be in this market. One is as a trader and the other is as an investor. I did a video last week that was quite controversial. Ever since I did that video, a lot of larger channels have essentially copied the content. But in that video, I spoke about the potential for there to not be an alt season like we have seen before. Not saying there won't be an alt season, but how I think this alt season might end up being a little bit different. If you haven't watched that, I'll try to remember to link it somewhere, but it is worth checking out. But there's one thing I want to say that kind of is in addition to what I said in that video, because in that video, the main message that I wanted you guys to take away from it was that it's time to start thinking how you're going to play the cycle according to your skill. And I know my skill is in trading. I am better off trading this cycle as opposed to trying to just buy things spot and hope that they moon by the end, because that is why it's happened every cycle. Now, that comes back to what I'm saying on Twitter. If you are feeling disillusioned every time the price drops, it's most likely because you're trying to hold spot bags. And like I said in that video, and I'll say it again, I really do think that this cycle is a trader's market. If you are a trader, then when the price goes up or when it goes down is completely irrelevant. You will be equally happy both ways, providing you chose the direction correctly. Because when you're a trader, you can profit even when the market goes down. Now, I know there's a lot of new subscribers on this channel. There's a lot of new subscribers that have come into every channel in crypto lately because of Trump coin, but this might be something that you're hearing for the first time. When you are an investor, when you go and buy something, for example, you committed your credit card and you bought Trump coin, and now maybe you're at a loss or maybe you're at profit, whatever it is, you buy that thing and you buy it at this price. And when you've bought it at that price, if it goes down, you're now losing money. If it goes up, you're now making money providing you sell. But when you're a trader, it's got absolutely nothing to do with whether or not we're in a bull market or a bear market. Both of them can be equally as profitable for you as the other. That's the thing. I get excited for a bear market because the moves to the downside tend to be much, much larger, which allows me to get much bigger profits. But the parabolic phase of the bull market is just the same. My only job as a trader is to pick the direction correctly and then get involved and then know where to take profit. So know this, if you're new to crypto, as a trader, you can make money no matter what direction the market is going in. And therefore, you don't have to become a bag holder. You don't have to feel horrible when the price is going down. You could be just as happy as long as you're in the trade, and you can make money throughout the entire 4-year crypto cycle. You can't do that as an investor. As an investor, you have to buy when the price is low, at its lowest point in the right part of the cycle, which you get basically a 1-year period to do that. And then you have usually 1 year where that thing will enter a bull market and hopefully continue to increase in price. And then you have to time when you're going to sell that, because if you don't, it will end up doing a 90-95% retracement all the way back to where you originally bought, and you'll end up making nothing. So if you don't want to be part of that, you have to be a trader, because a trader doesn't care if the price is going up or down. And there is no need for any trader today to be on X feeling like crap if they caught the short. they would still be making money. And that is exactly why I made that video saying that I am switching my strategy to make best use of my skill for the rest of this cycle by trading it instead of becoming a bag holder and trying to hold altcoins for this alt season that may not play out like it has in the past. So now with that rant over, hopefully if you're new here, you now understand the difference, because there is so much power in having the skill of trading that allows you to be able to make money regardless of the direction of the market. And when the bear market comes, you're going to wish you had this skill. So if you want to get the skill, by the way, we do have full courses on our trading strategy, and all that stuff is on our website. The link is in the description down below. So with that being said, let's talk about Bitcoin. So we saw a big drop in the price earlier this morning. The reason for that is because of this whole rise of the Chinese AI model DeepSeek. It's kind of rattled the markets, and we've seen $864 million in 24-hour liquidations. So look, I'm not here to worry too much about the news. I'm here to explain how the trading strategy that we trade is currently working out, and whether or not you can expect the current price action to bottom out today, or may we see further downside. So let's go straight into the Bitcoin price action. And I'm going to start out here on the daily before we have a look at the smaller time frames. So we want to get a big picture kind of idea of what is going on. As we know on the daily time frame, Bitcoin is just in a really high range. It's in the 91.9 is about the bottom of the range, with some wicks below that level, of course. And then we have about 106K is the top of the range, also with some wicks above that. Now, really, when you look at it, when we revisited the 89, we had this initial push to the upside, and this could be acting as a retracement. We obviously have many hours to go because this is the daily candle and there's still 13 hours at the time of filming this, but this could be a good area if it holds to open a long position on a smaller time frame. Like I said, providing it holds. This was an area I pointed out to you to watch first on a previous video. I said, let's see if price revisits around this area. I can't remember the exact numbers now, but it was somewhere around this area. We had a lot of liquidity here. I said, so if we return here, we first need to see if we get a bounce there. That will tell us that that was all the damage they want to do. If we don't, if we continue to have weakness there, then we would expect that we will revisit the bottom of the range next, and the bottom of the range being really somewhere around the 90,000 to about 91,500. We have some very high level long orders still waiting there in trading light that we can see. Those are these red orders here. Again, I've told you these levels on this channel before, but just to go through it again in case you are watching me for the first time, 90,300 to about 91,200 is the range. Now, in addition to that, there is something that's kind of spooking people a lot at the moment, which is this tweet from 𝗟𝗲𝗃𝗍, where he said, "The ugly will be published tomorrow morning. I'm calling for 70K to 75K correction in Bitcoin, a mini financial crisis and a resumption of money printing that will send us to 250K by the end of the year." First of all, you're banking a resumption of money printing before the end of this year. Whether or not that is actually possible is just another debate, but I'll get into that in another video. The point being, I want to focus on his targets of 70 to 75K. It's pretty similar to my potential target as well on the macro, providing we don't hold this level first. So, well, actually, providing we don't hold 50% where we are right now, then if we break that here, then if we break that potentially in the 70s where we have these large buy orders, but that's at 78K. So I'm a little bit higher than his tweet, but it's still in the 70s region. And what that could look like on the daily time frame would be, first of all, that this level doesn't hold. Now, we won't know that until tomorrow, till the new daily candle opens. But if this level doesn't hold, then we could be in a correction that kind of does something like this, revisits the bottom of the range, we form a lower high, and then we start coming down here. And that would be the final wipeout. Considering at this point here where price is right now, the sentiment in the market and people just really being over it and their altcoins bleeding so badly and they're really feeling pain already, could you imagine the pain they're going to feel if Bitcoin does drop to 78? Because I mean, what is that going to do to your altcoins? You're going to be decimated. So, we have to wait and see. Like I said, just focus on the charts that you're seeing and just worry about what is happening now when people put out analysis, there's no guarantee because nobody knows the future for certain. So what we do know is that we're in the current area where we now drop to lower time frames to look for hints of all of the damage being done for now, which will signal to us to get back involved. If those hints aren't there, we wait a little bit longer. It's as simple as that. So now when I go down to lower time frames, looking at the 4 hour, we can see this is a typical triangle formation that has broken. So it's failed because it came from an uptrend. It should have broken out to the upside. So this is a case where typical retail patterns don't play out, and I don't trade typical retail patterns. Also, if you're new here, you will not see me do this. I mark them because I want to understand what typical retail traders are thinking. Not to say I'm not a retail trader, of course I am. However, I don't trade what is known as retail patterns, which is things like triangles, flags, etc. I draw them out just to help me understand what the masses will be thinking, because most people who learn to trade learn this very basic type of formations. I trade something called the TBD system, which is made up of a number of different Forex strategies that are based on understanding where the large money is moving the markets. Large money is the market makers. So I focus on things like this, where the vector candle is, my colored green candle, and price revisiting that. So again, price has revisited that now on the 4 hour time frame. That signals to me that this is somewhere where I could be looking at today's session changeovers for a potential bounce. If I get it, I get involved. If I don't, I wait a little bit longer. So now that I know that, I can go down to the 1 hour time frame, and the 1 hour time frame looked like it had a potential to create a reversal, because this here is called a stopping volume candle, and it's when you have a high spike in volume that you can see right here, and it stops the momentum to the downside and you get a very large wick at the bottom. So that candle qualifies as a stopping volume candle for now, and also created the initial low of today. However, the follow through after that candle is what's really important. So this candle traps traders initially. We want to see if they remain trapped. We are under the low of the week. This happened at the end of the Asia session down here. So if we were going to trap people, we want to see UK move out to the upside now to keep those traders trapped. And what we can do is go down even further to dissect what is happening in the UK session. So UK's job is to run a trend. And right now it sort of looks like we're having a session behavioral shift, because Asia's job is to consolidate, and Asia today actually ran the trend to the downside. So far UK looks like it's consolidating. So that makes it difficult to trade when the behaviors of each session shift. But what you want to be keeping an eye on at the end of the day is that the trap traders remain trapped. If they remain trapped throughout the rest of UK and into US, one of these two sessions we would expect that we will start to have an attempted recovery. And that is where you might take a short-term long position. However, if these traders in these candles right here get released, there's more downside to come today. And that's literally all you need to be watching for. Whether it happens in UK or happens in US is kind of irrelevant. But if this bleed is to stop for today, we won't see these trapped traders released. That's all you need to watch for. Now, before I move on, I just want to make a mention of one of our channel sponsors. This is Bitunix exchange. It's one of the exchanges that I trade on personally. As a day trader, I love this exchange because I can execute my trades really fast, which is what you need to do when you're a day trader. You need to be able to think fast and act fast. And this exchange allows me to do that. On Bitunix, you can trade spot. You can also trade futures. It's a non-KYC exchange, so you should be able to sign up no matter where you are in the world. They have tons and tons of assets for you to be able to trade. So if you use the link in the description of this video to create your Bitunix account, you will get access to a 20% trading fee rebate for life. And that definitely adds up over time. So you definitely want to be using that link. And that applies to almost any coin as well. When we look at ETH on the daily time frame, it's the same thing. So this is higher time frame analysis where I'm showing you the retail pattern. Through here is where I drew this idea, and now price is coming down. So it could be possible that ETH is creating this part of the idea, the second side that might create either a double bottom or a higher low. So if that's what we're waiting to have confirmed on the higher time frame, then again, that means you get to go down to lower time frames. Now on Twitter, whenever I post trading setups for lower time frames, people are like, oh, it's so crazy, that's how you get burnt. Don't you understand that when you are trading, if you learn to trade smaller time frames, you have the best chance of making money? And you know why? It is one very simple answer that every trader forgets, because they say that smaller time frames are too choppy. Too choppy means I don't understand how to read price action. That's what it means. Do you want to know why day trading and trading smaller time frames is actually your best chance of making profits? I'll tell you why in one sentence. Because you're not in the market long enough for the market maker to take back your profits. That's why. As a day trader, you see the manipulation, you get in, you have your clear targets, you're out usually by the end of the day, at most 3 days. By the time liquidity builds and we have a case of over leverage, we have high funding rates, we have high open interest, you've already taken profit and you're clear of those liquidation hunts and you can see them coming. That is why there is nothing better than day trading. So if you ever see a trader say you shouldn't trade the 5-minute time frame or the 15-minute time frame, that's because they don't have the skill to do it. Just remember that. Let's move on. So looking at ETH, you can see the trap traders as well. Again, it's simple now. We want to make sure they don't get released. It's not great that we've come this far close to them, but we're still there. So as long as we don't break the initial low of the day at 30.20, ETH might bounce. Look for this part here, the end of UK, where it's around 8 a.m. New York time. So around the end of UK usually gives an extension. If the extension moves to the upside, it could be setting up for US to reverse what Asia did. What I mean by setup is, so let's just say UK continues to do this for the rest of the session, then it gets somewhere around 8 a.m. New York, you get this extension, and then we come back and create a higher low. It might be in the gap, it might be somewhere towards the start of US. If that were to happen, that is where you can get involved and you feel more confident that the trend is about to change. It can also happen the other way. So if we, again, continue to chop for the rest of UK, we get towards the end of this session, but the extension breaks to the downside and it breaks the initial low of the day, then in somewhere in the gap or somewhere around US, you would expect that it's going to come back to retest the initial low of the day, and we may then be getting further downside from there. It's very simple what to watch from here on out. The same thing for Solana. Look, they almost all do the same. Now, Solana is almost released those traders. So again, if it breaks its initial low of the day at 221.70, then again, you would expect further downside. The reason that your altcoins are bleeding more so than Bitcoin is because of the dominance. And so if we go and have a look at the dominance, you can again have a look at this. Again, I copped it last week because people are like, what? How can she be selling her altcoins when Bitcoin rejected 60% dominance? And I'm like, because it's a W formation, bitches. Like, look at this. This was the area. You can see this on all my past videos. I said to you, if we break this center peak on the dominance, then there's a good chance your alts will bleed further. And what it essentially means is that people are shifting their money back into Bitcoin because at this point of the cycle, they consider Bitcoin in the whole crypto industry to be the risk-off asset. So even if the Bitcoin price is coming down, if the dominance is rising, that signals to you that there is a lack of belief in altcoins. And so they're shifting back. That causes the dominance to rise, the Bitcoin dominance to rise, and it will cause others' charts, which I'll show you in a second, to come down, meaning your altcoins are bleeding out further and you're going to get less of a reduction in your portfolio if you are heavier in Bitcoin than altcoins. Of course, your other option, if you don't want to lose anything at all, is to switch to stable coins, but then you've got to make the decision of when to get back in. So right now, the exact caution that I warned you guys about seems to be happening, where it looks like today's candle is breaking the center peak of this potential W formation, which could mean that it's, again, still not time or even close to time for alt season. Now, this is a daily candle, so there is half the day to go at the time that I'm filming this. But the first things we would need to watch for on this is whether or not this does break and close above and then continue higher back to the previous high of this cycle, which is at around 61%. If it does, game over for your alts even more. Then if we continue beyond that, we need to zoom out to look for other targets. And the reality is Bitcoin really could come all the way back to 71% before there is any real turnaround that ends up looking like this. So anyway, that's something we have to monitor if and when it happens. For now, you're just focusing on what's happening on the daily time frame, and you need to make some decisions about where your portfolio is being held based on that. If we have a look at the others dominance, again, look at this. Symmetrical triangle failed, broke out to the downside. We're coming back to revisit this large area of interest again. So again, that's not fantastic for your altcoins. And then of course from there, you also need to have a look at the USDT dominance, because again, this is a bit of a worry. The USDT dominance, we've been waiting to see if we could break that support, that 3.82% support. We held it for a really long time here. We bounced out and then we came back and held it again. For bull market to resume, we want to see this dominance break down even further. That doesn't seem to be happening. It looks like we're getting another bounce. We're essentially just ranging here, you know, between these two levels. But if we start to break out above the 4.48%, what that means again is that people are now shifting their money into stable coins. Why do they shift their money into stable coins? Because they have a lack of faith in the price action of anything in crypto, and they don't want to lose any more money. So they're parking it in stable coins until they feel like it's the right time to start buying again. So this is a signal to us about market sentiment. And right now people are telling us that they want to be risk off. Now, the reason that they could be risk off, which is not a bad reason, is because of a news event that we have coming up this week. It is, of course, the FOMC week. So on Wednesday, we have FOMC, statement press conference, and that can be super volatile. So it's always one that it's sort of better to sit out of the market until everything comes out, you let it settle, and then you can get involved again in whichever direction it's going. But it's not really the best to try and pick what you think is going to happen prior to it happening, because if either the statement or anything said in the press conference surprises the market, as in something is said that they weren't expecting, that's when you see a fast shift in price, whether it be to the upside or downside. So it's very hard to pick, and it happens very, very fast. And that might mean that the first half of this week trading might be a no trade zone. But after this happens, after it settles, then you can kind of figure it out. In addition to that, we have consumer confidence on Tuesday. We have unemployment claims on Thursday. These are all in Dubai time, by the way. And we have core PCE on Friday. Now, what I'm showing you here is a custom plugin that we have built for our private community members. So you can't access this unless you are a member of our community. But what you can do instead, if you want to see this data, you go to a website called forexfactory.com/calendar, and then up here where it has the time, you just click on that and you can change the settings to your own time zone. And then when you have a look at the calendar again, it will have all of these times in your time zone, so you don't have to do a manual conversion. Now, if any of these levels actually break their initial low of the days in UK, they may create a new spike to the downside, similar to what you saw in the Asia session. And if it does that towards the end of UK, you're basically rinse and repeating the same process. You would then be waiting for the US session to open to see if US session gives you a higher low after that spike low. And that's going to be your hint that US is about to reverse the trend. So it's never about the price. It's always about how the candlesticks are forming and the movement that is happening at the time. If the movement doesn't follow through in UK today from Asia's spike low, we might just have a repeat of that we get another spike low in UK and then US reverses. Now, if you don't get that reversal signal, you simply don't act. You just don't buy. You wait until tomorrow and it all starts again. Tomorrow we'll be watching Asia. If Asia doesn't do it, we watch UK. If UK doesn't do it, we watch US. The false move week beginning can play out over the whole of Monday. So it is possible that the downtrend that started today could keep going into tomorrow. And it's also possible that it could turn into the 3-day swing, which is just a whole other thing that I won't cover on this video. But if it turns out to be that way, I'll do another video later in this week to explain it. And that just means that we would then potentially be looking for the midweek reversal trade setup, which might happen around FOMC. So I'll keep you updated on all of these things. If you found value in this video, please leave me a comment down below. I'm still having massive issues with fake bots posting rubbish and rubbish coins and things like that. And the only way that I can get YouTube to say real people watch this channel and they really get value from it is if real people like yourself not only hit the like button and subscribe, but also just leave me a comment and let me know what you thought of this analysis. Take care out there, and I'll see you on the next video.